what CRE portfolio managers strive to get from a BI tool or an analytics perspective, they want to know the biggest changes, improvements, or especially deterioration in risk. What you see on the left side, the portfolio by internal bank rate, is essentially the properties, the loans that support those properties have been scored, and it's very valuable for a commercial real estate portfolio manager as anybody that is in the credit risk side of this, because they're very interested in biggest changes in risk on loans that have been recently reviewed and properties that have been recently reviewed that have gone from a passing grade to higher levels of risk. These numbers, 1.96, 12.4, and then all of a sudden a big jump to 26.1. These are probability of defaults, essentially saying how likely is it that my loan for this property is going to default, and monitoring this on an annual basis to see any major changes in risk. That is critical for commercial real estate managers and credit risk professionals because that dictates how much money goes into their calculation for allowance for loan losses. On the right side, you start to see more detailed information about the properties and the loan itself, how was the structure, what the levels of risk are. And you start to see more details about the loan amount, net operating income of the property. These are all metrics that are very, very important in commercial real estate. And then down at the bottom, it's a different heat map where we're looking at which are my riskiest products from an aggregate level. The more that the bank can refresh this data, the quicker they can react to market uncertainty and market changes. What a portfolio manager would do then is click on the multifamily portfolio, for example, and then that would take us to a more in-depth view. In this example, I'm looking at consumer vitality. This becomes very valuable to be able to visually see where the properties are located and what the consumer vitality and other factors may be. Here, it's a great scale of 1 through 10 being the worst, but I want to focus on these properties that have a grade of 6 that have a increased in risk. So I'm going to click on that bucket. And this is one of the great things about Arcadia Data. Now I have linked my geospatial analysis directly to only show me by risk bucket, by score, only the properties that fall into that category. So now when I go down below, I can drill down further into those properties. Let's say we're going to go to committee and discuss these properties. I can click on these addresses and now overlay information about the parcel boundaries, crime index, right, which is very important for commercial real estate bankers. They want to know how the parcel boundaries have changed and, of course, what else is going on around the properties that may impact the value, the vacancy rates, and obviously their ability to generate income.